Hello, everyone. If we haven't met before, I'm Alex Norman. I'm the co-founder of TechTO. I'm an operator with 2 exits, did a bit of professional service in my life, and I'm an active investor in the Canadian ecosystem as both the head of Canada for AngelList and a partner of N49P. Thanks for joining us for the latest episode of Founders and Funding. We launched Founders and Funding to demystify the fundraising process and the relationship between investors and founders. There's a lot of knowledge out there, but we found it was better to go right to the source and hear all the different stories. Today, I'm super excited for you for joining us. We have a double shot. We're trying something new. We have our main fireside, which today features Keri Gohman, Bain Capital, and Yoseph West, co-founder and CEO at Relay Financial. But after that conversation is done, we're going to have a quick chat with a Canadian company that raised a recent round, an early stage company, this time one from Saskatoon. You have to say that then to find out who they are. Now, for those of you that are joining our live recording of the podcast, there's a few ways we want to interact with us. We want you to be part of the show. So if you look to the left, you have a chat. Put any questions you want us to weave in the conversation. You can help shape the future of this fireside. Make sure we have energy, take advantage of those emojis. Blast them. We'll have customized emojis based on the conversation. Use it to give us feedback. And finally, if you're enjoying what you hear some tidbit of information you have to share with the world, please do so on social media using the hashtag TechTO. But let's not delay anymore and let's get started. I'd love to have Keri and Yoseph please join us on stage.
Awesome to be here.
I'm so glad to have you guys. And Yoseph, I feel like I've known you for 25 years because there's now something with COVID that everything I knew before COVID seems like it was 20 years ago.
Yeah.
I've used the mainstay of the Toronto tech ecosystem. But for people that don't know you, could you give us sort of your background? Yoseph?
Yeah, absolutely. Yeah, sorry, I think I'm having some temporary
Alex,
Wi-Fi issues there.
Yoseph?
But yeah, let me give you Am I coming through clearly now?
Yeah, you're coming through clear now.
Okay, perfect. Working. Wonderful. Oh my God, technical difficulties already.
Hey, it happens.
It happens. Okay, cool. My name is Yoseph West. I'm the co-founder and CEO of Relay. We're basically next generation banking for employer SMBs, primarily focused on the US. My background, primarily SMB fintech, accounting tech. I started a company that was acquired by Wave in Toronto, spent kind of a year there, and then was the third employee at a company called HubDoc and built out a global marketing function there until the exit to Xero, which I think we'll get into, given that Keri was the one who sponsored that deal. Yeah, great to be here.
So glad to have you. And we're going to go back into your background a bit later. Keri, love to learn a bit more about your background.
Excellent. Alex, can you hear me okay?
Yes, you're perfectly clear.
Okay, I don't seem to be able to hear Yosef, so you'll have to tell me what he says for some reason. Hopefully let me know if there's anything I can do on my side. But I'll give you my quick background. Just know, Alex, you might have to sort of toggle back and forth.
I've handled worse and bigger challenges. And if he says something about you need to know, I'll make sure I repeat it.
I only want to hear the good things, so skip all the bad ones. Thank you.
Cool.
So listen, I am an operating partner at Bain Capital Ventures. I joined the organization about 2 years ago. And what that means is I have a lot of flexibility in how I spend my time. So I spend about half of my time working on new investments, finding amazing founders, evaluating great companies. And then about half my time actually rolling up sleeves with a number of our portfolio companies and sort of lending a bit of my operating background as well. Prior to joining Bain Capital Ventures, I spent the last 20 years or so as an operator, really focused in on some combination of financial services in a more traditional sense at companies like GE and Capital One, and then at fintechs like Intuit and most recently Xero. Germane to this conversation is I spent most of my time at Capital One actually running the small business bank, which has significant applicability to what Yoseph and the team are doing at Relay. And then at Xero ran the Americas, but also our global platform business, which was building the beginnings of embedded payments, lending, and insurance in our app marketplace worldwide. I also had the privilege of working with Yoseph, at least briefly touching as my team led the acquisition of a company called HubDoc out of the Toronto ecosystem. So super happy to be here and to talk with all of you today.
It's amazing background. And before I go back to Yoseph's questions, a couple more questions just to understand, Keri, your background. So like, it sounds like you had a pretty amazing roles at these large financial institutions. So why move over to be, work in venture capital?
Yeah, well, it's funny. I think that one of the things that has been most exciting to me in my operating background is getting to have a real impact on small business owners, on big companies, on teams that I had an opportunity to lead. And one of the things that was really fun at Xero as well is running our app marketplace. So getting to meet, over 1,000 companies that were really just starting on the back of what we were doing at Xero. And I realized what's amazing about an operating background is you get to sort of spend your time every single day thinking about the company, aspects of the business, and going really deep. What's been amazing about investing is the impact you can have on many companies. And so I've spent my whole career trying to sort of transform financial services and find a better way to sort of make this sector work for people. And it's frankly just been a really sector that needs innovation deeply, is overly complex. Investing is an opportunity to have impact at scale. So you can work with many companies, many founders, many people, and to be right on the edge of innovation. And that, I just couldn't resist the opportunity to have an even bigger impact. And it just felt like a really natural extension of what I was already doing at Xero with the app marketplace.
And one other question before I jump back to Yoseph. So it sounds like you're passionate to have an impact at scale, multiple companies. Bain's a relatively large firm, right? And you're operating partner with a strong financial background. So I assume you focus only on fintech. And is there a specific thesis or certain type of deals you're looking at getting involved on?
I spend time really in two areas. So Bain Capital Ventures is the venture arm of Bain Capital. And what's awesome about that is we can move really nimbly. We can move quickly. There's just 30 of us in the team, but we're responsible for about $6 billion in assets under management. But we have access to this much bigger global platform. So it doesn't slow us down, but it does give us power to be able to do more for our companies. What's really great about the venture team is that we tend to focus on domain. So we do a lot of business to business. We do a lot of SaaS and infrastructure, and then we specialize in some combination of fintech, e-commerce infrastructure, security and privacy, and healthcare. So we tend to focus on domain. I spend most of my time on a combination of B2B SaaS and fintech. And what that means is, and I also spend time in healthcare focusing on fintech too, because healthcare has payments. And so what our thesis, and specifically the place I spend time, is focusing in on helping businesses operate more efficiently, and a significant amount of time recognizing that every company is a financial services company. So really focusing in on platforms that are critical, and then building embedded, either investing both in either in the platform or in the embedder. So payments companies, lending companies, insurance companies that are going to enable these platforms at scale. So that tends to be the place I spend most of my time. So I strongly believe that companies that help people operate their businesses more efficiently, or help them operate in their consumer lives more efficiently, that those are the places where people are going to want to transact and execute financial services, not necessarily at a traditional bank.
So I think that's a perfect segue to go into, we just lost Yoseph.
Uh-oh.
Yeah, I'm sure he'll be back.
He will be back.
Yeah, so maybe while we wait for him, I'd love to hear a bit more about let's talk about the first time you met Yoseph. So you were at a company called Xero.
I was at a company called Xero. We acquired this amazing company called HubDoc out of Toronto. And there were these two co-founders that led the group, Jamie McDonald and Jamie Schulman, who some of you probably know in the ecosystem. I see the claps. Love those guys. So terrific. They are awesome. And I had the great pleasure of working closely with them. Yoseph left just kind of prior to the acquisition. But Jamie McDonald reached out and said, I've got this incredible company. You've got to talk to Yoseph, and you need to sort of learn more about what they're doing. And so I met Yoseph, and there were sort of three things off the bat that were really impressive. One is the team he'd assembled to co-found the company, both himself, his co-founder Paul, and a few others. The second was the business model they built, this sort of new way of thinking about small business banking and financial management, but deeply connected into the accounting ecosystem, which was so powerful. So I found Yoseph in particular very credible in the space, given his background. And the third was I started calling around to some of his customers, and they started telling me how amazing this guy is. Product's not perfect, but he listens, he's incorporating, he's laughing, he's incorporating our feedback. And we really believe that this is going to be an incredible product and it's already delivering a lot of value. So that was how we met, through a mutual contact. And I did some early snooping around and was just really impressed. And so I had to lean in a little harder.
Cool.
Yoseph, we're glad to have you back.
Yes.
Yeah, sorry, I was having some major technical difficulties. I think it's resolved. Yeah.
Excellent. So maybe, while you're gone, we're trying to hear about the initial connection, and we'll get back to that. But let's take a step back and just in case someone doesn't know what Relay does, and you did a brief introduction to it in your intro. Tell everyone what Relay is.
Yeah. So it's next generation banking for like employer SMBs. We make it easy to actually like collaborate with your team. So you get like user permissions. You can actually like automate all your bills. We centralize all the bills. You have financial controls like baked into your bank account, which is really great. So you don't have to use, TD's shitty online bill pay. Can I say that?
Yeah, you can.
And then you can like manage your expenses through Relay Card, a bundle. And so our core thesis and our view is that over the last, call it 7 to 10 years, every part of the small business bank account has been unbundled, right? Like I think Bill.com is a perfect example of that. They took online bill pay at Bank of America and said, this sucks, let's do it for businesses and let's do it right. And we've seen kind of like that thesis play out. And as these cycles go, they typically go kind of like unbundle and then rebundle. Yeah. Two ways to make money.
The classic line, 2 ways to make money, right? Bundle and unbundle. So let's take a step back. You have a very interesting background, like one that I think is very unique. So talk about how the different steps or stops you've taken along the way played to understanding there was an opportunity here to create Relay. Because I have to think the stops you did play, have an impact.
Yeah, absolutely. I mean, it's always hard to tell where your career is going to take you. I definitely didn't think I was going to land in accounting tech. That wasn't.
You didn't wake up on like as an 8-year-old. I want to be an accounting tech guy.
Yeah, exactly. I wish I had that level of purpose. The genesis for the business basically, when we were, when I was working at HubDoc, I was there, 4.5 years. I would keep like an Evernote notebook, and I know that slightly dates me because no one uses Evernote anymore. But I'd keep an Evernote notebook of every challenge that we faced as a business, like any problem, like no matter how small or big. And one of the ideas was like small business banking. Like I would hear the Jamies complain about it or swear about it quite often. And I was like, okay, that's like a good one to go and explore. And as, Paul and I were like thinking of ideas and like working this through, there were kind of 3 core things that we wanted, like 3 boxes we wanted to check in terms of an opportunity. So one was like a macro kind of change that was going to happen in the world, whether we built the business in the space or not. So HubDoc, our whole bet was people were going from desktop-based accounting to cloud accounting as a once-in-a-generation shift. And we just had to survive long enough to like have that shift, tip. And I can tell you there was like a lot of, in the early days, like crying into your pillow at night being like, oh, 20% growth, it's $200 a month, right? So our core view was that like in 10 years, banking was going to be digital by default. And whether we built Relay or not, someone was going to build a business like this. 2 was actually having like some type of like competitive advantage, like some, kind of founder market fit. Obviously, like my background is like SMB fintech. I've been at Wave, I've been at HubDoc. Like I know the ecosystem really well. And I have like a distribution advantage around like accountants and bookkeepers. That's how we scaled the HubDoc business basically. And the view was we could apply that playbook here as well as a lot of that domain expertise. And then I know I'll let you jump in a sec. Oh. And the last thing, was like a unique insight. So something you kind of like understand about the world that like very few people do. So the HubDoc business was basically like centralizing all your key financial documents for small business owners. And that was kind of such a huge pain point for accountants and bookkeepers and the small business owners they worked with. But really what was happening behind the covers was we built kind of like bank statement fetching. It was web scrapers that downloaded bank statement PDFs. And accounting and bookkeeping firms would pay us anywhere from a few $100 a month to $5,000, $10,000 a month to just download a PDF and bring it into our software. And then we were global strategic partners with Intuit and Xero. And their number one feature request wasn't better like cash flow reporting. It was actually just bank feeds that work. So how the banking data gets in. And so we realized that the access to financial data is kind of a limiting factor on financial visibility for these business owners. We thought, how do you attack that problem? And realized the only way to do it is to be the bank and attack it at a foundational level. And we thought about what would it mean for a bank to be deeply integrated into the small business back office? Could you increase financial visibility? Could you make these business owners more successful? And that's really kind of where it started. Yeah.
I love the insights. I love how you came across the product. A couple of things I didn't hear, I'm curious. Like one is, you talked a lot about HubDoc. You also worked at Wave. So what insight and impact did that have on how you thought about this problem? Because I know Wave is tangentially related to banking, but it is still your financial statements.
Yeah, like I mean, what was built at Wave is like obviously a great Canadian success story. The insight, I think, as it relates to like accounting software in general and banking, is that it needs to be like a deeply symbiotic relationship. And the tighter, the union is wound, the better the value is for the business owner. So for example, like we have this functionality that integrates into both Xero and QuickBooks Online to like pulling your unpaid bills. And it's a two-way sync between the bank account and the accounting system. And the benefits you get are like, it's actually much neater from a bookkeeping perspective because we're the bank and we're able to like kind of make it, without getting super nerdy here and tactical, make the bookkeeping like super straightforward. And you get like best in class payment settlement times because we're the bank account. We're not pulling from one place and sending it to another, right? So it's like same day or next day payments versus 3 to 5 business days to actually like pay your bills, which is huge for small business owners.
And then one last question in the background. So you had this unique, you're at HubDoc, probably have some connections in Xero after the acquisition. You're at Wave. Did that provide a talent advantage? Did you know how to get some people who had some domain expertise and just pull them out?
I think we definitely
and they proactively joined you. Not that you pulled them out. Sorry. Let me rephrase that. You never pulled anyone out. They all came to you, of course.
Yeah. I mean, I think being sensitive to kind of people that I care about and want to see succeed is something I did to the best of my ability. We've definitely had some hub dogs, as we called them, join us, and we're super grateful to have them on the team.
Cool. So love this background. So you go and launch the company. And when did you actually launch it?
It was late June 2019.
Okay, so Bain came in finance day round, but tell us what happened before Bain. So you did I think seed round with BTC, Better Tomorrow
Ventures.
Ventures or BTV. Tell us, like, you launched. How did you get that initial round to come together? Because those guys are both in San Francisco, and what were you looking for from your backers there? And love to hear how that round came together and what you were trying to accomplish.
Absolutely. So for a little bit of background, we did like a pre-seed in kind of like January 2019 prior to like launching the product into market. And so we kind of like, focused in on our customers and growing the product and validating our perspective that, this kind of thesis would work. And kind of COVID hit at the beginning of like 2020, right? February, March, we were planning to go out and do a fundraise at that stage. And so, in transparency, we battened down the hatches, negotiated every vendor relationship we had, asked team members to do like salary, everything we could to like make sure we were, going to make it through. And so what ended up happening was like that lean focus on our customers really forced a lot of creativity and a lot of traction. And so as we went through that summer and we started to fundraise, we started to get like really great introductions. And one of our angel investors, Jeremy Yap, was actually instrumental in that introduction to Jake and Sheil, who are the partners at BTV. For context, like Jake actually has a famous tweet where he claims that neobanks are like e-commerce businesses. So I remember reading that tweet and then being like, I can't wait to talk to this guy. Meeting is gonna go poorly. And so like brought it up and had that conversation. And it was actually really, really constructive because he saw how we were thinking beyond just being like a skin on the bank. We're thinking about actually delivering deep value, right? And that's really where Bain saw the same thing, where Keri has this deep expertise around like SMB banking, right? She's seen all of these deals. And she saw that like we were approaching this differently because we have this like credibility in the space, this deep understanding of SMB needs as it relates to banking and their back office. And so I like a meeting I had a call with Jake, and then I met Sheil, and there was a lot of back and forth on email. They were sending us questions. I remember like sitting on a Saturday afternoon, like responding back, being like, I hope this works. And then, you know, there was kind of a competitive situation. There was another firm that wanted to put together a term sheet. And then, you know, BTV jumped on it, and I got to say it was really, really wonderful working with them. So that closed in October of last year.
So October of last year, that's not that long ago. So what were you, when you closed that round, what were you thinking? What do you think you were going to do?
I mean, for us, it's all about the people. It really is. So our primary objective with any funding round is to make sure we have people that are aligned with us on like values. And so as soon as we closed the capital and we did like, you know, deep reference checks on Jake and Sheil, and, you know, it all came up like roses, the references they provided, the back channel stuff, like all of it. And so we were really excited to have like great partners on board that were like very well respected in fintech, right? Like this is effectively like a YC stamp of approval when it comes to fintech. And so to us, we had to go from, you know, being a very lean team saying, okay, now we need to, you know, put this capital to work. And the business just continued to increase the velocity, right? Like it's just started to work more and more. And, you know, we send our investors monthly updates like any good company does. That's not true. I think there's lots of good companies that don't do it.
But you should do it.
But you should do it.
We'll just like tip people.
And you should have two versions. You have one for your investors and one for everyone that's following along, which is different information.
Because we were definitely following along at that stage. Really.
So maybe let's segue here. So like, you know, Keri, you talked about when you met Yoseph. Was that before, like how long, when was that? Was that even before the seed round?
Yeah, it was right before the seed round. And we kind of came a little late to the table. And I'll tell you, like, it's really important in your seed round. There might be folks that you want to court for the future. And I came in, you know, and our team came in a little bit late to the party, but Yoseph was kind enough to let us put a small check in. And what's great about Bain is we can write a check from $100,000 to $100 million. And so, you know, we wrote a small seed check to be a part of the raise, frankly, and to really get to know the team. And, you know, we were impressed. And so we started tracking them pretty aggressively. And I think, as Yoseph said, you know, I and our team have been in and around the neobanking space for a long time. And one of the things I did at Capital One was build a small business bank from scratch. And so I had already known what we did wrong and what we did right. And I knew that what Yoseph was doing was the right way to do it. This sort of deep integration with accounting. They'd really rethought customer acquisition. They'd rethought how to integrate payments, how to make it sort of a part of the platforms business owners use. And I sort of were building the bank I wish I'd built. And so I was paying a lot of attention. It felt really different from what I'd seen. And so when we started to see the traction, we started to lean in harder. You know, they were building great product and releasing it fast. They were attracting some incredible team members, and so really impressed with the team development. And Yosef did a nice job keeping us up to date on the progress, but also just staying close and, frankly, and very appropriately, making sure we were adding value. So we were making introductions, and, you know, he'd ask us questions and, you know, put us to work as he should. And so, you know, shortly after the seed round, we started to think about the A and sort of proactively got a little bit competitive. And there was a lot of preempting behavior. And so we were lucky enough to get a chance to lead the next round, both because we had a lot of conviction and we didn't have to do as much work, right? Because we've been tracking the company. So it let us be quick, get Yosef and the team back to work, and also made sure that we sort of had a chance to demonstrate the value we could bring to the table later.
So I want to pick apart a bit what you've said there. So first, I find it very fascinating that you wrote a $100,000 check in the seed round. And I'd like to get both.
A little bit more, but tiny.
Okay, well, a small check, because you said you could 100,000. You didn't write. Obviously, it wasn't a $100 million check, and you didn't lead around. So I'd like to know from both your perspectives, why does that make sense? Because like there's there's always this. And it's usually for a lead, but there's always, founders tell me, oh, should I take a check? And then what's the signaling risk if they don't invest? And Bain's not a small firm, and it has a good reputation. So I'd love to hear from both your perspectives. Why did that smaller check make sense?
Yoseph, do you want to start and I'll jump in?
Yeah, absolutely. So signaling risk is a real thing. No kidding. I know we've seen companies have challenges with that stuff. The reason we did it was because we actually had two large firms doing the same thing, and so we figured that if this thing is working, one of them is going to preempt, and that's going to create a competitive situation, and the juice will be worth the squeeze, basically. And thankfully we were right, because it could have totally gone the other way, where it was 0 for 2 and you're really in trouble. So that was the bet we made, and it obviously played out in the way that we had hoped.
Yeah. And as an investor, look, we're unlikely to write a small check unless we really have pretty good conviction that we want to be involved. And these deals move fast. And, when we got introduced to Yoseph and the team, he'd already done all the diligence that he just articulated with Better Tomorrow and, his seed investors. And so, we didn't want to compromise that situation for him, but we wanted to be involved. And we knew early that it was likely we'd want to lean in on the A. And that's really why we do it. Otherwise, Bain and many investors tend to want to take a lead position if we're going to be involved, and get involved as early as possible. If we come late to the party, but we have conviction we want to lead the next round, we'll often do a smaller check, but it's almost always if we have conviction. Otherwise, there's not a point.
Yeah. So that's very interesting, because my next follow-up question, which I think you've already preempted with the answer, is for $100,000, it's 100,000, 200,000, relatively small check for Bain. You've got lots of other investments. So how do you make sure they get the attention and you lead in like you would with other companies? Because it's very easy saying, okay, I wrote a $50 million check here. And especially for, I don't know if you were the one that was taking the lead on this, but you're an operating partner. So you're leaning in and helping a bunch of other companies with day-to-day activity. How do you create the mindset where you got involved? But it sounds like maybe it's because of A. And then also, Yosef, what's your expectations? Because they're not leading, it's a smaller check from that round. So what are expectations when you come with that check?
I will say Yosef was very clear with me about his expectations for taking our money early. I can see the hearts. No, he said, hey, tell me you're really serious, that you want to lean in, and then I'm going to get attention from you. And in fact, he asked me to start attending board meetings early so he could get a sense for style and engagement, even though I wasn't officially a board member. So, and I made that commitment myself. So one of the things you have to do as an investor is be ruthless with your time. You can spend time with a lot of different companies. I'm very, very careful about making sure that I have a short list of companies who I want to be invested in, or who I'm working with on the portfolio side, but that I don't overstretch. Because you can't add value if you're focused on 50 different companies. You just can't. And it's important to me, because of the purpose of what we're doing. We're trying to create transformative companies that are going to make a real difference in the industry. You can't do that if you're spending time with 100 different companies. You've got to be thoughtful. And when we made that small check, and we do this with every company, we made the decision that I'm going to treat this company like they're part of my portfolio and I'm already sitting on the board. Otherwise, there's no point in making the small investment or taking Yosef's time. And I'm pretty committed to really seeing this through, and there's a high likelihood we'll want to lead the next round or a round after. So I think the two things are a commitment up front from both of us. Yosef was clear about his expectations. I was clear about mine, and my intentions were clear. And then the second one is on my side, making sure I keep the number of portfolio companies I'm spending time with low.
So Yosef, I'd like to hear, but you don't have to get into detail, but what are those expectations? Because I think a lot of founders just go out to raise, and it's first capital, and when there's a bit of demand, like, oh, what else should I ask for? So it sounds like you had a purposeful demand or request from your investors. Along what lines were you looking for help?
Yeah, I think it is about that intention that they are planning to help, and it's not just a check and we'll see how this goes. Because Bain is a huge fund, right? Like they just raised $1.2 billion. And so, if you're talking about a $250,000 check, it's like just trying to drive that number up. It's
going to be $3 million check.
Yeah, exactly. It's quite a drop in the ocean for them. And so I wanted to have confidence. And so not only did, Keri and I communicate openly about this, but I also talked to some of her partners to make sure that we were going to get the attention that we felt, we deserved, as part of this deal. And given the risk that you take when you're taking a small check from a large fund. And so that's really where it started. And I think, something I learned kind of early through one of our earlier investors is, put your investors to work. Don't be shy about giving feedback. And if you're not getting what you need, tell them, because I guarantee you they want to be helpful to you and they want to deliver value. And it's probably just that they're busy, right? So you might have to send a couple texts and do that. And that works. And so, yeah, I think openness around the relationship, I think it goes both ways. And I know I trust Keri and Keri trusts me. And it's a really strong relationship.
So by the way, you can get money from lots of places, particularly right now. It's really about what is the expertise the partner's bringing to the table? Are they demonstrating they're doing the work for you? Are they making customer introductions? Are they connecting you with relevant people in the industry? They're helping you recruit. You can be picky as a founder, and you should be. If you're building a great company, it's, this is an environment where it's easy to get money, but getting money from someone who's going to lean in and help make your company better or contribute in a meaningful way is the most important thing. You have to live with whoever your investors are for a very long time. So pick wisely.
So I'm going to get back to the easy money and living with investors in a second, but one particular, okay.
Can I jump in on that? Sheil, who's one of the partners on BTD, anytime I see him, he's like, how much value is Keri adding? I feel like she's the perfect investor for you. She's got experience at Zero. She ran, Capital One small business bank. It's got to be amazing. And I think that was part of the reason, right? That we took the chance on the 250. Right. We took that in the seed because we're Keri's a formidable person and, she could deliver a lot of value and insights. And that was kind of our experience as we kind of, had those initial conversations where it was a good dynamic. And so I think that's also worth calling out.
Cool. And I love that. One question, I want to go back to asking for help. So you said you have to remind investors that that you're right, they're busy and they may not be giving help. How do you make sure you get that help? Is it, like you said, is a text? Do you have precise, you say, I need an introduction to ABC and I know you have a connection? What's the tips for founders to get help from their investors?
Yeah, I don't go that specific generally. So one is, I think the first thing you can do is once investors have given you money is give something back. And I think that's for us in our context, giving a monthly update. And doing it, we send it out on the 3rd of every month. We've been doing it for 2 years. You can go back and see it, and we've never missed one. And so I think that inspires a lot of confidence in terms of the consistency and the quality of the people that our investors are dealing with. So I think that's where it starts, is creating that consistency in the relationship. And then 2, the ask. We do general asks around hey, we want to calibrate on what a world-class sales leader looks like. Can you help introduce us to folks in your network? And investors will go out of their way to say, hey, I know, A, B, or C, or I know this person, I can make an introduction, give me a couple lines. And that is really, where it starts is, investors today really have to work hard to earn allocation, right? And I think that's the mindset that the best investors have. And that's what we see across our, cap table.
And
I'd also add, Yoseph does a really good job of this, but it's true no matter what company you're you should be telling your board where you need their help. Yeah. At the end of the day, we're invested in the company because we trust Yoseph and the team to build a great company. And we're here to help enable that however we can, but we also don't want to be, there's a point at which help is not helpful. And I've lived that as a management team member as well. And so you want to be specific with your asks if there's something that a board can be helpful with or an investor can be helpful with. And, every board meeting that you go to or every investor meeting, have a list of things that are on your mind. And often it can be, Yoseph wants to talk about something. How do I think about rhythms and routines as we scale the company? Or how do I think about selling, XYZ proposition, or I want this introduction? Obviously, the monthly updates help give us a way to think about proactive offers that we can make that might be useful. but also always come with a list in the back of your mind of where someone can be helpful to you. And I think, Yoseph, you do a great job at that. But I think, many companies that I work with, even if they're not even, by the way, it doesn't have to be limited to a company that knows me. If one of my partners has a company that needs an introduction and I have it, I'll often get tapped or asked to make introductions on companies that I'm not actively involved with. And you should think about not just the partner that you're working with in an investment firm, but also the broader investment firm, not just portfolio companies, but other connections or contacts. And that's where Bain Capital, being a big organization, can often be disproportionately useful, because I can kind of work my way around the system to find people that will be useful to my companies.
Awesome. I like that, also thinking about the bigger institution, not just the partner. Now let's get to the A round that happened. So it sounded like you were delivering upon what you promised, probably a bit more. It sounds like the round was preempted. So, it was relatively quickly. So I imagine you didn't need money, right, at that point. So why did you decide to be open to the preemptive? You easily said no and come back to me in 6 months and maybe even get a higher valuation. So Yoseph, why take the money?
I think it has to do with confidence in the space and the company and what we're building and the team. And then I think it also has to do with what are the terms being offered. So, in this type of environment, and especially in a competitive situation that's being preempted, you can work your way up to terms that are agreeable and perhaps would give you credit for, a certain number of months of execution. And that's really how we thought about it. We're like, okay, in what scenario would we choose to do this? And what is the risk balance that we feel comfortable with? And we were able to get to terms, thankfully, and candidly, we were super lucky that this all kind of came together, right? Because it generally doesn't. And I've been on the other side of the table where it's like, holy crap, this sucks, right? And so this came together relatively quickly, and we were able to get to terms that we felt like were representative of what we would have wanted to do in the next round anyways. And figured like, we're going for it. We're building something for 10 years and we want to build an amazing team, and having capital and partners behind us that can really help us do this was, paramount. And so we figured, let's just go for it.
And then, Keri, it sounds like you already sort of given us a preview. The rationale behind you was like, hey, we have confidence in this team. We've now seen them execute. Let's not let this one get away.
Yeah. And I think it's also that we had, along the way, we were able to build conviction. So we were really clear that we believed the business was working. We talked to a number of customers. They loved the product and the capability. We had an inside look into the team and the progress. So we were able to move very quickly in a way that, again, didn't distract the team, because raising money is a lot of effort and work, particularly if you're courting a number of firms. And so we were able to save the team that time, get to evaluation. Yoseph was clear about what valuation he wanted and expected, and we felt comfortable with that given what we'd seen. So we were able to get to some agreement. And then I would say the other piece is like, we could see the potential, because the team had product market fit and were making so much progress, of what additional capital might mean to the ability of the company to sort of scale and to strike while they had and have an advantaged position and a unique proposition in the marketplace. So not only did we sort of believe we wanted to be a part of it, but we're like, wow, extra capital means this company go fast and take over the market. So it increases for us the view of what success looks like for the team.
So it sounded like you knew the capital would be used wisely. There was an opportunity, 100%. There's going to be an ROI. And then it sounds like before this investment, you were a board observer, and now you've gone to be a board member. Is that correct?
I technically wasn't in a board observer. I'm not sure what I was.
So you're a board hanger-outer.
I was a board hanger-outer. Only if I added value. If I was annoying, I'm sure he would have kicked me out. And then have now become a board member, which is exciting.
So I think one other place that founders get mystified is what has your relation changed? What, as a board member, what's your responsibilities and how do you guys interact?
Yoseph, do you want to start and I'll jump in?
Sure. I mean, we had a board meeting yesterday, so
we did.
Great. Yeah. So I mean, honestly, it's pretty similar to like what it was before, which is, the way we do our board materials, we do like a board letter, and each functional lead does their own materials, and each board member gets to like comment and engage and kind of ask questions about the business and push us to figure out how do we grow faster, how do we accelerate this thing in the way that we all want to. And so I don't think, to be honest, Keri, I don't know if you feel like things have changed that much, because I don't.
I don't. I just
no.
feel more married, if that makes sense. Like, I feel like
Yeah.
we're in it for the long haul. We are excited about the company. I feel just as much commitment as I did earlier, but I'm even more connected to the company. And so I love that orientation. The conversations have continued to increase in quality as we've brought on new team members, as we've continued to sort of move forward. But they're just as engaging as they were previously. It's just that we know we're in this it's a good thing we like each other, because we're going to be together for a long, long time.
So I'm going to give you 3 more quick questions, because we've gone over the time I told you I'd take. One is, what excites you or scares you most about the next 18 months at Relay? I'd love to hear both of your answers.
So sure, I'll go. Keri, I'll go first. So I mean, the great existential angst that I have is like, what does the workplace look like in 2022? I think, we're looking at office spaces, and we're like, yeah, we're going to go to this number, but how many people are going to be in office? Like, what's the remote situation? So I think that's like, a multivariant problem that no one has the answer to, and we're trying to do surveys, and it's just, it's hard to get a read on this. I think the challenge that everyone faces in this market is like, how do you hire the best people possible? And that is really where we're focusing. So we've hired a head of talent who previously ran talent at Wattpad. So as we've talked about, we're hiring tenured leaders and really building like a world-class culture around that. So if anyone is looking for a new opportunity to have a huge impact at a growing company with great backers like Keri, and hopefully great people like me, hopefully, come apply. Go to relayfi.com/careers. And we'd love to talk to you, or email me directly, Yoseph, YOSEPH @relayfi.com. Sorry for the ad, Alex. I had to go.
No, I expect you to do it. If not, I worry about you as a founder.
And I'll underline an exclamation point. I think hiring amazing, like, I have no doubt that the team's going to hire amazing people. I love the team. We get the opportunity to interact, deeply in the board sessions. And so I feel very connected to the leaders that Yoseph has brought on, and I think they're amazing. So talent's going to be a huge part of it as we scale. And then I'd say the other thing, I think I'm scared as much as I'm excited for the team. Like, we're growing fast. So with that comes a lot of thoughtfulness around how do you, I love that. She just flashed your relay.com/careers up, Yoseph.
So good.
But look, we're growing the team really quickly, and every single company, and I face this as an operator, and I face it with the companies I work with on the investing side, it's just scaling really fast. It requires another set of muscles, and the team is, up for the challenge, but we need the right team in place. And we're building new muscles every single day. And every 6 months, the company is a brand new company because it's growing so quickly. So that is definitely going to be the next 18 months and hopefully a number of years to come.
Cool. Now the next 2 are not related to the company. One is, if you could see any company come into existence, what do you think we need to start up in? And it doesn't necessarily have to be venture scale, but if you'd like to see a founder listening to this start something up, any ideas? And maybe as you think about it, if someone wants to reach out to you, what's the best way? I guess Yoseph, you've already shared your email address. Is that better, or is Twitter better, or if someone just wants to interact with you?
I would say I'm Gohman at baincapital.com. LinkedIn is great, actually an easy way to get in touch. And I've met a bunch of companies in that space. I would say, there's a company that I just met that I was really excited about. Like, it's sad that financial services is still so far behind where it can and should be. And it's the reason I've spent my whole career there is it matters to people's lives and their livelihoods. And so, I can't name just one company that I wish would start, because every day I'm like super jazzed about the companies that I'm meeting. But I did meet a company the other day in sort of individual tax prep that I thought was so interesting, really combining the fact that we all live on so many platforms, bringing those together. So just like Yoseph and the team are doing that in the small business sector, starting to think about that really actively in the consumer sector, not necessarily just as a neobank, but across all aspects of financial services, insurance, tax, accounting, everything that you do as a consumer. So I think those themes of how do you take advantage of the data that exists today, the financial stack, the reality that we live across many platforms, but just expect things to work together. Companies that are really building the infrastructure layer around that, as well as the sort of customer experience, I think are really powerful.
Cool.
Yoseph,
any
what
ideas?
company do you want to see?
Wait, I was just, you know what? I have a secret, like a private message group with myself on Slack where I put like business ideas, just like dumb ideas that come into my head. I put them in. I was like, do I have enough time to like open Slack and look at it? But here's an idea that I think is actually like compelling. I think, we're going into an era where being a digital nomad is becoming, more mainstream, right? Like you can look at the kind of great migration that's going on across the US from San Francisco to New York to Austin to Miami. I think we've all heard enough about it in Canada, which is quite funny. And I just wonder if there's kind of like a class pass for Airbnbs, basically, or spaces to stay, where you could like plug into a community where you have like co-working spaces and it's all together, and you can do this across multiple cities. Maybe a better thing is like class pass plus like Soho House. I don't know, but I think that'd be really cool. I would write a check for that, I think.
I feel like a couple companies tried to do that before COVID and they went bust, and now it's the time to do it. Like, weren't they trying to do that with We Live?
Right. I mean, timing is everything.
Yeah.
Timing really is everything.
But I think you're right, because actually I was just talking with a couple of founders today saying, hey, we don't know what distributed hybrid looks like, but I think there's going to be a class of people that are relatively young that will travel around the world every 3 months. And to be plugged into community is very cool.
And live across multiple places on multiple platforms and in very different ways.
Yeah, getting my taxes done if I had that lifestyle would be very helpful.
I mean, see, like Yoseph, it's the combo of our two businesses.
Right. Yeah.
There you go. As part of the community, you get your taxes done. Thank you both so much. I love this conversation. Thank you for taking your time out. And I'm sure you'll probably get a few emails after this.
Awesome. Well, this was really fun, Alex. Thanks for having us.
Yeah,
thanks both for joining us.
Fun.
And if you're enjoying this conversation, please stay on, because we're going to try a new feature where we're going to highlight early stage company from around Canada that just raised. And so I'd love to have a special segment. We're going to do a lightning fire round of questions with Curbie. Curbie Cars raised $7 million in seed funding led by Connexus Ventures, with participation from Taskworks and Broad Street Bulls. Hi, Alex. Thanks for joining us.
Hey, thanks for having me here today, Alex. This is fantastic.
Yeah, so you're based in Saskatoon, if I'm correct, right?
Yeah, Curbie Cars is based in Saskatoon. So we founded the business back in January of 2017. We got up to operations in September of 2017. But I myself, I'm based in Calgary, actually. This is one of our expansion markets. So I've been living out here for the past 5 years. And there's a whole story about how the company got going, but I'm definitely based in Calgary here.
So I'm going to start with one quick question. Like, if you read Beta Kit, Globe and Mail, I think disproportionate attention and gets put to Toronto, Montreal, and Vancouver. But when I think of Alberta and Saskatchewan, there's a lot of exciting stuff happening. So what as someone that's living in Calgary, has a company in Saskatoon, what is the ecosystems like there right now?
Well, this is a really interesting question. When we first started Curbie, our plan was to get it going in Calgary, actually. And that's where I was based at the time. I still am to this day. My business partner was just in the process of moving with his fiance from Saskatoon out to Calgary. But the crazy thing was that the will to get the business going, the money, the partners, everything just came out of Saskatoon. So we decided to, stop fighting gravity and just get it going there. Because we believed that very strongly. If we could get it going there, where it's, I'd say, a slightly more tech regressive market, we could take that anywhere else that we want it to go. So that place would harden us very well. So Saskatoon also turned out to be a very nurturing place, because it's kind of like, it's hard to see, but you can kind of stretch your hands out and you can touch everybody you need to touch in order to get something going pretty quickly. It's a very, and as long as something's going on there, people want to be involved. So it's a great place to get something started.
Cool. And is that like, I imagine you go for like coffee, I guess pre-COVID, with like Jordan from Seven Shifts and Catherine from Coconut. Is that how, like, I guess you can quickly know the whole ecosystem and you support each other.
Absolutely. The ecosystem is fantastic. Actually, those two that you just highlighted right there have been great for Curbie. Jordan Bush, for example, he critiqued one of our first pitches. So he provided pitching advice to me back in the day. So it's and learning from Catherine as well. She's on the board of directors at Collabs. Collabs is the incubator that Curbie was a part of. So it's a very very tight knit community. But those two companies are definitely the leaders right now. They're the first cohort. Now there's a second cohort that's coming up, and Curbie's at the front end of that
Awesome.
second cohort.
And for people that don't know what Curbie does, can you give us the 30-second pitch?
Yeah, I guess, so Curbie is Canada's first fully licensed online vehicle retailer. And what that means for us is we were actually, going back to Saskatchewan being a nurturing place, selling cars is a regulated industry. The regulator in Saskatchewan actually gave us exemptions for certain rules to operate as a fully online dealership. That hasn't been granted to my knowledge in any other part of Canada. I'm not even sure about in the United States either. So what that means to say is other dealerships that operate online have to function just like a traditional dealer as far as the regulator is concerned. So that means you do have to have a place of business, you have to have salespeople, you have to have kind of all the trappings that go along with it, whereas we got to avoid that. So it's been, for us, that's another reason why Saskatchewan was a great place to start up, because we really got to try the business the way that it was supposed to be run.
So cool. So what I'm hearing is all the other, I guess a dealership in lots of regulation has to have a physical location, has to have a salespeople, but you're an official dealership, you're online, and you've got exceptions to the rule.
Correct, yes.
And so go on.
Oh, nothing. I was just going to say, and those are actually relatively difficult to attain.
Yeah. So a couple of questions, like, how are you able to attain that? Like, that was my next question. Is like you have to go like negotiate with the regulators, and imagine the dealers don't like this, so they probably put a fight with it. So how'd you get this?
It's a long road, but it comes down to just like everything else. It's networking and making sure you know people. But like I was also saying, so I used to live out in Ontario for a long time. Before selling used cars, I worked in the finance world. I worked in commercial lending. Then I worked in international finance at Export Development Canada. I finished up my finance career at CMHC in capital markets, managing a $2 billion portfolio. So all you have to do to get into selling used cars is climb the rungs of high public finance in Canada. So anybody can really do it. So anyway, now I'm selling cars, obviously.
Yeah.
And so I was able to bring that history of understanding finance, but also that understanding of government and how it works, because I worked for public crown agencies. And so what that meant to say was understanding how regulators function, or even, for example, how the regional economic development authorities function has been very important for us. So that's how that all began. Was I just knew how to talk to them, and like I was also saying, culturally, there's just a bit of a difference within the. Yeah. There's a very pioneering type of attitude out here, very entrepreneurial. Like almost everybody has a business or a side project. And so long story short is that's embedded in the culture. That made it easier for the regulator to understand.
Cool. So it sounds like you know how to talk to all the stakeholders. The culture was there and you worked through it. And then, And what cities are you currently, if I want to look for a used car, imagine you have geographic constraints just because of the inventory. So which cities are you operating in currently?
So Curbie currently operates across the entire Prairie region. So that's Alberta, Saskatchewan, and Manitoba. Our inventory is largely centralized in Saskatchewan, but per the latest funding round that we closed back in at the end of March, we're scaling up our presence across our entire footprint. So what that means is we will have vehicles located in Alberta and then eventually in Manitoba as well. So what's interesting about the way that we found it as well is that Saskatchewan and Saskatoon specifically are small markets. But every single market that we expand to afterwards is a much bigger market than where we came from, which is it's an interesting growth story as you go. So it would be another story to say that we were founded in Toronto, for example, and that, oh, hey, we're going to raise money and move into the Prairie region. That's a crazy story to tell somebody, relatively speaking. But
So if you can keep expanding, eventually you have to go to Rio de Janeiro, Mexico to get it, the mega cities.
I think all of these companies are moonshots, so eventually we want to be on the moon too. But
yeah, and tell us about raising money, like in Saskatoon. I imagine COVID helped, but you did raise $7 million seed round. So congratulations on that. Tell us about the experience, how you went about finding your partners.
I think raising $7 million almost killed me, but here I am. I think whatever doesn't kill you makes you stronger at the end of the day. But raising money on the prairies, I would say, is definitely not easy. It's not like Silicon Valley. People aren't ready to write checks everywhere. But the things that attract the investors out here are the same things that attract investors everywhere. So for us, for example, the market opportunity, I think, is an important thing to talk about. Within the automotive sector, it's a $1.3 trillion market between Canada and the US. Like, forget the globe, just Canada and the United States. In Canada alone, it's a $200 billion market opportunity. And so that includes, the sale of used cars, which is where we are today, eventually new cars as well. There's a service opportunity, but the bulk of the profits in this sector come from finance and insurance. And so when Keri was on just being interviewed just prior to this, she mentioned that every business really is a fintech business if you look under the hood far enough. And dealerships are exactly that. So it's the combination of this large market opportunity. Obviously, we've had exits in the space. There are 3 companies in the US that have exited. Their valuations are quite high. That's attracting capital. And then, of course, there's always this fintech play that's sitting out there as well. Currently, half of the customers 55% of our customers take loans, which we originate at Curbie. And a good chunk of them will also take insurance and extended warranty products as well. So we're a very powerful platform, or companies like us, I should say generally, are powerful platforms for a fintech.
Interesting. So I love that. And then how do you find actual people that VCs invest in you? Like, are they local? Like, I'm not as familiar with them as some other ones I've known, like Bain, obviously Bain Capital Ventures, big name, everyone knows about them. But are they local players? How did you get connected with them? How do you find them?
Yeah, I mean, these are really good questions to ask, because lots of this stuff a lot of infrastructure in the prairie region just didn't exist that long ago. So when I was mentioning that, you mentioned 2 names before. There was Jordan Bush at 7 Shifts and Catherine Renier over at Coconut Calendar. They've raised a lot of money. They were the first cohort, really, I'd say, out of the Saskatchewan tech eco space. But since then, there's been a lot of infrastructure built out. The province has put a lot of money in. New investment funds have been founded. So that's where we came along, is right at the beginning of all of that stuff. So one of the investors is PFM Capital. They use the subsidiary called SaskWorks. They're the largest labor-sponsored fund in Saskatchewan. They've been watching us since day one. So there's a long relationship with those guys. And then Connexus VC, they're headed by Sean O'Connor, who came out of a company called Grow. They were a BC-based fintech play. So he's running that fund, and he's known us for about 2 or 3 years as well. So some longer relationships, but we got to the place where it was time to scale up. It became obvious. Back during the pandemic, we saw sales increase pretty dramatically. Margins that we were earning were quite fat, actually. We compare very well to actually all 3 American competitors in the U.S. We turn inventory as fast as Carvana, which is in line with the sector generally. We have our margins are fatter than what they have at Vroom and Shift. There's another statistic I had as well. Anyhow, long story short is that we actually compare very well to those guys. And part of the reason for this is that we're in a choice region. Automotive margins tend to be a bit higher in the western part of the country. And so just kind of naturally, like I was saying before, it's sort of a nurturing place to get a company started. This is one of those other added benefits that have been great for us.
Cool. 2 last questions. One is, what's the future?
We get this question a lot, and it's one of those things where I think you don't really know the future till you know where you've come from. And I think, growing up in the prairies, we've had to do a lot of things I think that other companies haven't, which is to, become a little bit, it's actually like Yoseph was saying during the previous interview. You need to, with a lack of resources, a lot of ingenuity comes out of it. And that's what we've faced ourselves. So we found that our focus needs to be a lot on profitability. That's one of those things that makes us stand out versus the competitors. Also coming from a place it's just a cultural thing. We like our businesses to stand on their own a little faster. That helps us grow. It gives us options. And that's what we're looking for. So for us, we're scaling up across the prairies. We'll solidify that footprint. Currently today, we have a monopoly over that business model. And then, of course, we're looking to expand to the rest of Canada. But we're definitely not immune to expansion markets in the U.S. We actually export cars today into the Seattle area. And so that might become a place for us to go in the future. Cool.
And the last question, if someone wants to contact you, what's the best way to reach out to you?
Yeah, please get in contact with me at my email address is Alex, ALEX, at curbie.ca. That's Alex at Curbie.ca. But you can also follow Curbie at Curbie Cars on Facebook, Instagram, and Twitter.
And actually, I'll throw in one more question. Are you hiring?
We're always hiring.
Okay.
It's one of the big things that we got going on. With this latest funding round, we're looking to add to the team pretty substantially.
Cool. And I guess it's on your website?
It's on the website. We're also on Indeed, but you can also reach out to me as well to find other job opportunities.
Awesome. Thanks so much for joining us, Alex. I love the success, and I hope to see you all across North America soon.
Very much appreciated. Thank you so much for the shout out about our deal back on May 13th. And thank you for inviting me on the show. It's been a pleasure.
It's my pleasure having you. Thank you so much. If you're enjoying what we're doing here, you want to know more about what's going on in the ecosystem, you can subscribe to the TechTO newsletter, where we highlight some amazing companies, some fun, news that's going on in the industry and people. It's at techto.org/newsletter. Also, we want you to join us for our future events. You could, first of all, if this is the first time listening to Founders and Funding, you can listen to our podcast and hear the past episodes. We have about 30 episodes out there with different pairings of VCs and investors and founders. And next Monday, we're at 4 p.m. Pacific and 7 p.m. Eastern. We're having our next TechTO together. This one will be focused on health tech. We're going to have Sharif Habib, co-founder and CEO of Dialogue, who just went public, to come talk about their journey to IPO. And we're going to have Andrew Arruda, CEO of Automate Medical, who is helping medical professionals work smarter by digitizing and analyzing patient data. Please join us. It's going to be very exciting and very interesting. And then next Tuesday, we'll be joined by Adil Kazmi of Swift on our Canadian Rocket Ship podcast. On our Canadian Rocket Ship podcast, what we're doing is we're highlighting companies that can help you accelerate your career. And every week we're interviewing one of the founders featured in that. So make sure you join us for that. And then thank you for joining us. If you want to meet other people in the ecosystem, we're going to open up networking for the people that are participating live. Be kind to people, ask smart questions, see how you can help them. Thanks, and have an amazing weekend.